day to everyone. This is Venture Investor Economic Focus by InnMind, and today our guest is serial entrepreneur, venture investor, a partner at TMT Ventures, and business angel, Igor Shoifot. Hello, Igor.
Hi, everybody. How you doing?
Awesome, thank you. How are you doing during this quarantine in San Francisco?
Well, San Francisco is very unusually quiet, and you can get a lot of things done. And of course, it's no fun what's happening outside, but we're getting by.
Igor, I know that you are very active investor and person and businessman, and you usually participate in lots of events and lots of meetups, conferences, demo days, etc. But now it is all stuck in this situation. So how do you deal with that?
Well, I'm used to actually working from home. It's been quite a while since I started working from home, maybe a year and a half ago, when we closed the office in San Francisco that we had for a decade. And, it's pretty much the same routine. The only thing that's strange is that I used to meet with startups a lot and go to some, not too many events anymore, but right now I just work from home. I don't think it changes things that much. What I really miss is going to the gym, really. That's the one thing.
You didn't have time to buy the weights and etc. at home?
Well, certainly, yeah. I have what they call high bar to do pull-ups, and I have a whole bunch of other things, and I have a lot of boxing and kickboxing. So I have 3 so-called reflex balls. This is a ball that you touch, and you can do some boxing with it. But you can't compare an actual sports environment, an actual gym, to what you can have at home.
Yeah, and the discipline's better.
That's true.
So if I understand correctly, as an investor, you need to meet startup founders face-to-face. At least I heard it from a lot of other venture investors. Online communication is not enough for you to make the final decision to invest. So how can you assess right now?
This could be, it's pretty hard to generalize, but this could be general American, but especially Silicon Valley kind of thing. Lately, quite a few of the startups that we invested in, we have not met with physically. One of our startups, very successful, just a recent example, Acern, we invested $1 million in them. We had maybe 4 or 5 or 6 online meetings, phone calls. Then one of my colleagues became their board member. But for the first time, I met with the CEO physically, like literally a month and a half ago. So,
awesome.
Yeah.
Right now you made happy a lot of startup founders which are looking to, watching this video.
Yeah, I don't think it really changes that much. I think since big part of our communications are visual, not just voice communications, it definitely helps when you speak on video, but I don't think it really changes that much if you're physically in the same room versus being far away. But there is one aspect that might still make your founders, your entrepreneurs, a little bit sad, which is that investors, not all of them, but quite a few of them, have geographic focus. And typically this geographic focus, not always, but typically, doesn't have anything to do with where the team is located, but it has a lot to do with where the clients are located. In other words, if we're investing in, and there are certain reasons, I could give you our reasons why we don't invest in companies with, fantastic business, let's say in India. Nothing's wrong with India or Indian market, great Indian entrepreneurs. My niece is married to an Indian, so it's a great culture, great minds. But the reason we wouldn't do that is because purely statistically, there are very few exits in India, and investors make money when there are exits. So we believe, doesn't mean that everybody should believe this. I'm not suggesting it's the right strategy, it's just our strategy. We believe that most of our investments should be either in the United States, because there are so many exits here, or in places that are somehow closely connected to the US market. Mexico, UK, Israel, places where, Estonia has been incredibly successful for us. So yeah, So I would say geographic location of customers means a lot, but where people are located, the founders, be it, Algeria, India, China, who cares? It actually could be a plus if the team is in Algeria, because it probably means very low salaries.
Yeah, that's true. The expense rate, the burn rate will be really lower than at least in Bay Area or in Switzerland.
Oh yeah, for sure.
Igor, how do you estimate the effect of a stock market decline, and actually what is happening right now in the market? How do you estimate how long it will take to recover?
Well, first of all, not a single person in the world knows the answer. Not a single person. And every time you tune in to, or read, Bloomberg, Financial Times, etc., all of those experts, if you record it, or if you, bookmark that video or that article and go back, not even a year, like 2 months later, huge majority of that is completely rubbish, not because they're stupid or silly or they don't know what they're talking about, but because there are so many endless factors. So the only thing one could say is there are certain factors to look at, but I think and I certainly understand, I don't want to offend so-called financial experts. It's their job, that's how they make money, so they can't say I'm not 100% sure. Actually, I'm not even 50% sure. There are some probabilities, but I think it's kind of wrong to say, well, the market is doing this. But what I think is right is to pay attention to say, listen, let's just pay attention to certain important things. And one of such things is what's happening in specific industries, and certain industries are hurt beyond belief. I don't need to tell you that restaurants are closed, department stores are closed. Moreover, people are getting into new habits. People are not getting, usually in the West, those of you, you and myself, and a lot of your viewers living in the West know that it's typical to come to work every day dressed in a different clothes. In some other countries, it's completely okay to wear the same costume, like day after day after day after day after day. Sometimes even the same shirt, for many days. Actually, in Silicon Valley, sometimes programmers wear the same shirt for like weeks.
The same black shirt?
Yes. Or the kind of shirts that I love shirts, so I wear a lot of them. But so that habit might, not necessarily die, but be hurt, because right now, usually people do shop a lot for different shoes, different clothes, different costumes, different dresses. And so that could be one habit that could be hurt. There are certain industries that already were in a rather precarious situation. If you look at the department stores in the US, Sears, JCPenney, and a whole bunch of others, Macy's, they were already kind of balancing. Right now, gosh, who's gonna invest in them unless the stock would just really drop? But on the other, and there are tons of other industries that hurt. On the other hand, you could really argue that there are several industries that are getting incredible boosts. Robots, robotics have done a lot of amazing stuff, but right now there are so many things that people are afraid to do, and robots can do that, and there are existing robots. And the funny thing is, they sometimes are even cheaper than human beings, but regulations and habits precluded us from engaging the robots. You could also easily argue that things have been moving online, and in some countries they've been doing incredible job at moving online. We all know about the success of Alibaba, Amazon, and a whole bunch of others. But right now it's being so sped up. Amazon famously is hiring over 150,000 people, and some experts say that within the next few months they might need to hire a million, one company, 1 million people. Of course, most of these would be low skill delivery, warehouse, etc. But who cares? Still, none of those people are engineers or people with PhD in biology that lost their job and started.
As a stupid all.
Yeah. So anyway, so all I'm saying is, and I know I'm not giving the direct answer, is take a look at specific industries. Some of them hurt and will hurt, and some of them might be in serious trouble. Some of them just got an incredible boost. We one of our investments is virtual reality gaming training company, and their growth has been through the roof. They could barely have enough employees to onboard
You
customers.
mean they train gamers, or they train employees through gamification?
They train gamers, but training employees through gaming and training pilots, et cetera, is what they're going to do next. Right now, the company is called Legionfarm. Legion.
We will put the link under the email.
Cool. We had another app which we successfully exited, that actually were environments for corporate communications. I can imagine they're probably experiencing amazing boost right now. I'm still happy that we made money and exited, but they must be growing great.
But I see you still got prepared, because you have quite a few startups in your current pipeline right now, which are boosting.
Yes, that's right. But also a few hurting. We all the startups. Well, luckily only two that we have that has to do with offline. They're hurting because the stores are closed. People are not shopping, and so of course they're in deep trouble. And also some of the startups are being hurt, actually kind of pretty much across the line, because a lot of them have been fundraising, and right now venture capitalists, including us, are kind of taking a strategy to just sit it out.
Seriously, it was my second question actually. What are you going to do? Are you going to freeze your activities or whatever? Because not all investors are doing that. I mean, I've heard in our previous interview, it was with another venture fund, and they were telling me that they are going to increase their investments during this turbulent time.
Interesting. We are trying, we're a public company, so I'm a little bit afraid to make sort of generalizing statements. I'm limited by what a public company representative could say. We're traded on London Stock Exchange, I'm AIM. So I should be careful and say this is my opinion. This is not an opinion of TMT Investments. Is that it's important to be brave, but it's also important to be rational. So I know it sounds very sexy in some movie like Silicon Valley. Oh no, we're going to go through this hard time. We will continue investing and putting the money forward. It's lovely, but let's just go back to real life. As romantic as you could be, and I think most of the people, at least in Silicon Valley, love to feel that they're more on the romantic side rather than cynical side. Most of the people like to think that they're risk takers, etc. But risks need to be weighted out. So on the one hand, we're not stopping. I just just over a week ago there was a big demo day for Y Combinator. So I looked through literally almost 200 companies, 197 companies, pre-selected about 20. We got down to 5. Now I have a feeling that probably 2 or 3 might make it, but the conversation is going very, very slowly. And we have a couple of other companies in the pipeline that we're discussing. But the thing is, I think every single VC or even angel investor, I only know 2 or 3 angel investors that I know, I wouldn't say are scared, but are very careful for several reasons. One, and now I'm being completely rational and happy to discuss this with whoever disagrees or has a different take on this. One, in the times of crisis, investors expect, I think rightfully, that the valuations would fall, with the exceptions, of course, of companies that are so skyrocketing because of this crisis that it would be pretty hard to argue, why that would fall. But across the board, with the majority of companies, VCs would expect that the valuations would fall. But we had literally just several weeks of it. So it's a little bit too early. And in speaking with companies, I do not get a sense that they're already thinking about crisis time. valuation. There is a general uncertainty as to for how long the active part of the crisis will last. One of the biggest questions that nobody can answer right now is how nasty is the coronavirus, COVID-19, how nasty its its role in the United States and in general in the world will be. We now, as you know, have over 100,000 confirmed infected cases. Pretty much everybody agrees that this is just those that were tested. We only, as of today, had 700,000 tests in the US. That's not too much for 330 million people population. At least 3-4 million tests should 1% of the population should show what's happening, right? We only started the whole what they call here shelter at home. Literally, San Francisco was one of the very first cities, I think one of the first 3 cities to announce it. It was 2 weeks ago. California announced it later on. New York announced it later on. The latest, I think yesterday estimate was that just over 80 million in the US, so just 1/4 of the US population is being sheltered at home. I think personally it's horrible. I think it's just totally horrible that 3/4 of the people are roaming free and infecting each other. I think it's also understandable because it hurts the economy horribly, and there are rich states like California with GDP. I think we have like 4th or 5th largest GDP in the world, just California itself, and lots of money, lots of rich corporations. But there are also poor states for whom 1 week of business is not working, not even 1 week of business is not working, but restaurants closing, department stores closing, laying people off, the unemployment benefits, the lowering of the tax rate, that all sounds horrible. So I'm far from saying that they're stupid. I'm just saying, I can understand why they're so reluctant. So sorry to be talking too much, but basically, number 2, I've been talking way too much. Number 2, we don't know for how long and how deep the results of this will be. How many people will die? How many people would be hospitalized? How severe the disruption will be? So that's another thing to kind of see. If we would at least know, for example, that 2 million people would get sick, and 200,000 would be hospitalized, 20,000 will be dead. It's horrible, but it's something certain. But nobody can say for sure. So that's the second thing, uncertainty. And then the third thing, probably less important than the first and the second, but also quite important, is what is going to happen with the top floor of the financial system, because venture capitalists are not on the top floor. You basically have so-called limited partners, financial institutions or family offices investing in your fund. So what's going to happen to those if banks start falling apart? We all remember what happened to Lehman Brothers, humongous multi-billion-dollar bank. Then something really major is going to happen. But if not, then things are not that bad. So I gave a very long, convoluted answer to a very simple question. So I'll try to answer in 3 sentences. 1, everybody's waiting for the valuations to be more sensical for the stage at which we are. They're not. 2, everybody's waiting to have at least a clear picture of where the bottom or the border would be. And 3, everybody's waiting, not as important, but also very important, what's going to happen to the heavy financial institutions that kind of feed the market.
So I understood that the company is worried because they don't have certainty. This is the main problem. The problem is not that market is falling or growing or whatever. They need to be certain what will be in the next 6 months or whatever. But at the same time, and we have received these questions from the startups from previous interviews, if we understand correctly, the venture fund has some budget already collected from LPs and etc. And this budget should be invested during some period of time, for example, a year.
So yes and no. First of all funds are, not every single fund is unique, but all funds are different. Some funds like ours do not have what's called capital calls. It's easier, it will take me time to discuss, it's easier to Google what capital calls are. We're a public company, we have specific amounts of money already in the bank. We can raise more, and we're raising more from time to time, but for that we need to issue more stock. Other funds are different. Then there are also the kinds of funds that already have the money committed, and that part of the question is right. For you have 100 million, let's say for simplicity, in the bank, and if you just sit on it and do nothing, or if you put it in the bank, it earns a tiny percentage. Shouldn't you invest? And the general kind of simplifying answer is yes, you should invest. You have this money, you have some also deal flow, you've been working on some things, you should invest. But and as soon as you get into details, it's always very different. It's like when you're looking at any, let's say, Google-based statistical maps, you see things in general and you say, for example, the average salary in California, I forgot what it is, but something like $60,000 a year. But once you, kind of run closer in the map and get to Bay Area, you see that the average salary is like 110,000. Once you go closer to Palo Alto or financial district of San Francisco, you'll see that it's 160,000. Once you get, to Sand Hill Road, you'll see that it's 350,000. So it's all very, very different. And in a specific fund, it's also very different because you have certain companies in your fund that you sometimes want to support. Not just, giving them free money, of course, but, getting equity for this, etc. But you want to have a little bit of cash to help those. You also have employees in the fund that you want to continue paying salaries to. So you need some cash for that. You also need to do some, marketing, PR. Well, trips are not possible right now, but in other times. So you're kind of allocating that differently. And in the times of crisis, you typically, I'm not saying everybody does it, but typically you say, let's just have a little bit of a pillow for the companies in the fund that we want to support. And that's another reason, one of the many reasons to have venture capitalists on your side, because they don't want you to fail.
Dear friends, and if you want to know what will be next, if you want to know what Igor thinks about the angel investments in the startups and pros and cons in comparison with venture investments, what is the specific of startup selection and what is the percentage of fails during the first investments, and if you want to listen to his advice to startup founders and entrepreneurs facing challenges like ongoing crisis right now, please wait for the second part of the video, which will be released very soon. And meanwhile, don't forget to put like,